Well, one shareholder group calls Barclays' disclosure on remuneration opaque and says that pay plans for executives are overly complex. The group, which represents large shareholders like pension funds, says poor disclosure stops shareholders from understanding the full amount that some managers earn. Now, they're recommending other Barclays shareholders oppose the bank's remuneration report, which includes a £6.5 million bonus for CEO Bob Diamond. Well, Barclays declined to comment. Well, joining us now to discuss Barclays and some of the other blue chip earnings that we've had this Wednesday is Lothar Mentel, Chief Investment Officer at Octopus Investment. Now, Lothar helps manage around £2.5 billion in assets. I wanted to, first of all, thank you so much for coming in the studio. I wanted to get a sense of actually how you rate the earnings season so far. We've had quite a lot of companies performing. A lot of them have beat estimates, apart from the banks that are under a little bit of pressure. Overall, is it a good crop?
Yeah, so far we're quite happy with the earnings season, but we were sort of expecting a good earnings season because we know that the first quarter has been good. It's very much for us the question, what are the outlook statements saying? How are the CEOs looking forward? Because everything to our mind at the moment is in oil. What has this higher oil price really done to consumer sentiment, to the general global macroeconomic recovery, and how are the CEOs seeing it? So that's what we're watching.
And actually, Electrolux today was saying that a lot of the raw materials will go up, and that will impact what they see in the future for them. Are there any sectors that you would stay away from because of the price of oil and because the guidance that they've given so far indicates that they'll have a terrible quarter?
Well, yes, you have to look at sectors one by one and which ones are more affected by the oil price, and perhaps also particular companies. If you think of the car manufacturers, who are the companies that build more of the gas guzzlers and who are more in the more economy segment of production. So those are the things that you need to watch specifically. But for us at the moment, it's more the global macro story. How much is the oil price really doing? In America, we know that the consumer sentiment is very much driven by what they pay at the pump, but also in the emerging markets, how much is that holding them back? The jury is still out on that.
And so what do you make of those BP earnings today? Net income better than estimated, but actually if you look at the adjusted net income, it was below estimates.
Yes, I think what we have here is analysts at the moment struggling after all these disposals to really come up with the higher quality sort of estimates until we know again how BP is working. So is it a negative surprise? No, probably not necessarily. We just have to calibrate all our spreadsheets again, I suppose.
But you still believe that actually it's a cheap stock?
We still think it's fairly good value. When you look at, 60 billion been taking off their market capitalization from the spill last year. But, the spill is, well, there's some rumors it might cost a bit more than 40 billion, but there's still quite a bit of a value opportunity in BP to our mind. Although the Russian story at the moment doesn't really help.
No, and we kind of now have deadlines, but we don't really know what's going on there. Does that mean that you would back off BP, or?
No, we still think that they will sort it. It just may not be quite as good a deal as it looked originally, because they might have to spend more to buy themselves out than previously anticipated.
Now, Barclays also came out with figures that actually were below estimates. You say the stock looks cheap.
It does look cheap, but with banks at the moment, they should do well because we're still in a credit crunch environment. There's still not enough credit available because the structured credit market is still not back online. So they should do well, but then there's this cloud of increased regulatory burden over them, and therefore, yes, the stock looks cheap, but you don't really know what's in the future. And particularly with banks operating in smaller, or as a base in smaller economies compared to the US, the problem is, well, Barclays' balance sheet is about the size of the UK economy, and therefore the UK will want to make sure that nothing can, that they won't have to do another bailout round in some years' time, and therefore you could expect and can expect that regulatory environment in the UK to be tighter than, for example, in the US, who could stomach a failure of a bank much more easily, and that will be a drain, and that's why we have these discussions about where you want to be headquartered.
Yeah, and actually a lot of the investors that we've been speaking to say we have to wait a couple of months to have a better picture of the regulatory environment. Lothar, thank you so much. Lothar Mentel there.